Yeah. Anybody tried that question, solving that question? Okay, no problem. Let me share the screen quickly and then we'll go from there. Okay.
Dheeraj, Vishak and me tried it yesterday.
Okay.
Like the second point is the point where sale proceed of plant and machinery which became obsolete.
Yeah.
So that we have to start calculating the depreciation for that from 2017, right?
Depreciation from 2017, you're saying. Not needed, Max, not needed.
Okay.
And if you remember, what I told was when you're selling the asset, depreciation is of no relevance. Just
Okay.
whatever money you are getting, you just deduct that in order to calculate the closing balance.
Okay.
Depreciation is not needed. You are calculating for which purpose, as in to calculate the profit from the sale, is it?
Uh, okay. Yeah. So what you said is correct. So that wasn't needed at all.
Not needed at all, because ultimately we need the WDB, written down value closing balance, so that we can
We
multiply
already
the
have
rate
that.
simply and calculate. So
Okay.
whatever sale is there, just deduct it. That's all.
Okay.
Hmm.
So what this means is that did he sell it for a profit of 5,000?
No, what it means is the sell proceeds of plant and machinery. What does that mean? Sell proceeds is what? That much only he has got it. 5,000
Okay.
cash he got. Yeah.
Okay. Fine. So we have to just minus the 5,000.
Just 5,000 deducted. Yeah. No other
Okay.
complication.
Okay.
Okay.
And then for the A part,
Yeah.
we have to write that off since he's shifting it to use it in his office, right?
No. That is a whole different provision. I haven't discussed that provision yet. So let me
Okay.
introduce that provision, then we'll take the relevance of it. It will not be deducted like that, the way
Okay.
you are saying. So, okay, before we go further into the question, let me, for others who have not seen the question or practiced the question, for them, let's read through the question. Messrs. Dollar Limited, a manufacturing concern, furnishes the following particulars, serial number, particulars, and blah, 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 blah. Opening WDB is given, 5 lakhs. Purchase of plant and machinery during the year, put to use before 31 October 2020. What is the relevance of this? I'll discuss right after reading the question. 2 lakhs. Sell proceeds of plant and machinery which became obsolete. The plant and machinery was purchased on 1/4/2017 for 5 lakhs, which becomes 5,000 is the sell proceeds. So 5,000 only we have got for the whole machinery. Further, out of purchase of plant and machinery of 20,000 has been installed in the office. Plant and machinery of 20,000 was used previously for the purpose of business by the seller. The relevance of these two, I'll discuss. I'll introduce a new provision. After that, only we'll take consideration of these 2 points. Compute depreciation and additional depreciation as per Income Tax Act for assessment year 2021-22. Now, the basic thing that you can already understand is the relevance of the first basic 3 points. One is your opening WDB was 5 lakhs. There has been a purchase, so you have to add it 2 lakhs. Then there has been sell, so you have to deduct it 5,000. So that should come to 6,95,000 should be your balance. Does everybody agree? Any questions on that?
No, Dheeraj.
Okay.
No.
Awesome. Now let me introduce one provision here. Where an asset has been acquired during the previous year and put to use for less than 180 days during the previous year, then only 50% of the prescribed rate of depreciation shall be allowable. What does this mean? In a year, you have purchased an asset and you have used for less than 180 days. Only for that first year, your depreciation will be half. Only for that first year. What will happen in the next year? Normally, whatever happens. No half, full depreciation as usual. So the other half is completely waived off. Now look at this question here. Purchase of plant and machinery put to use. Second point I'm talking about. Purchase of plant and machinery put to use 31 October 2020. Now it says put to use before 31 October 2020. If you do a back calculation, no, we have financial year from 1st April to 31st March. If you do a back calculation from 31st March, you would reach 3rd of October is the date. Beyond that, if you have purchased something, it will be half. Before that, if you have purchased something, that will be full. I'll repeat that. If you do a back calculation from 31st March and you consider 180 days, 3rd October is the date beyond which, if you purchase an asset, then it will be half depreciation. Before that date, if you purchase something, it will be full depreciation. Any questions on this?
No.
Awesome. Now you can do that calculation by yourself. You would actually reach exactly 3rd October. If you considered March and February, you are considering 28 days. Okay. Now, here in the question, if you read, they're saying put to use before 31 October 2020. Here is a confusion. It is not mentioning the exact date. What should we do? Can somebody suggest? It's saying before 31st October. So it can be 30th October, in which case you can take 50%. It can be 1st September, in which case it will be full depreciation. What should we do?
We should define what we have considered.
Yeah, you can take either way. Just write a note for it. Say that as the question's information is not sufficient, we have assumed that this is the date and this is what we have done. Make sense? Any questions on that? Okay.
No, this is to consider it as 50% depreciation, right?
You can take both way. Yeah. That is the logic. Yeah, that's what we
in the note, if I define it was put to use before 3rd October, then it becomes full value. But after 3rd October,
yes.
Yeah, if I define it as after 3rd October, it becomes 50%, right?
Absolutely. That is absolutely correct. Yes. So let's go by full depreciation only. Okay. Let's make it very simple. Let's go by full depreciation only. So the put to use has happened before 3rd October. So full depreciation. That means we don't have to do any half or anything. So as we have already calculated the what do you call it? The WDB, closing WDB, which came to 6,95,000. On that, we will apply the percentage straightforward, which is 15% for plant and machinery, which comes to 1,04,250 is the depreciation. Any questions up until now?
Dheeraj, just speaking of the provision, even if it's bought on 31st March, still we would have 50% depreciation on it.
Absolutely. That's the beauty of the provision. Even for one day, you would get 50%. That's what people actually do. So you want to do tax planning on 30th March, you purchase a whole lot of assets so that you can charge depreciation and pay less tax. A lot of people.
I see. Yeah, I've heard of it. Yeah.
So yeah. Any other questions? Okay. Now let's look at one more provision, which is this. There is something called additional depreciation or enhanced depreciation. So there is a facility provided by Income Tax Act, which says enhanced depreciation up to the rate of 20% of the actual cost shall be allowed under section 32 in respect of new plant and machinery other than ships and aircrafts. Forget about that, not important for us, acquired and installed. What it says is only for plant and machinery you have purchased during the year, you can take 20% additional depreciation, additional to the original rate. Original rate was 15%. Now you have additional of 20%. It comes to 35% total. So enhanced depreciation will not be allowed. There are some cases where the additional depreciation will not be allowed. For example, if it is an used asset, it will not be given. There's some conditions of the facility provided by the income tax department. Now, if it is an used asset, it will not be allowed. So that 20% additional one will not be allowed. Please don't confuse it. Normal depreciation will always be applicable. They're only talking about the additional one. I'm talking about the additional one. If it is a used asset, additional depreciation of 20% will not be allowed. Suppose it is in plant and machinery which is installed in the office or in a guest house or in a residence, it will not be allowed. Suppose it is a office appliance or it is just a vehicle, car, motor car or something like that, it will not be allowed. So there are many other exceptions to this. I have only included 3 here. Other than these, I don't think anything else is important for us. So now that we have read through this, let's look at the question again and the last 2 points. Further, out of purchase of plant and machinery of 20,000 has been installed in office. Would you get additional depreciation on this 20,000?
No.
Dheeraj, one quick question.
Yeah.
Unless it is mentioned that the machinery is used, we should consider it as new, right?
Absolutely. Brand new. Yes, that is absolutely correct. In fact, second point would actually make our concept even clearer. The B part says plant and machinery of 20,000 was used previously for the purpose of business by the seller, which means that other than this, everything is brand new. As they're very specifically mentioning, a part of the machinery is used. So will the additional depreciation be available for this 20,000?
No.
No. Now, can somebody tell me what is the additional depreciation then?
Only on the amount which was paid, 6.5 lakhs, 6.95 lakhs, on that it will be available.
Okay. Can you do the calculation?
Only 2,000, 2 lakh purchase opening. So it's only on 2 lakh it will be available, not on the others.
So 2 lakh into 20% you are saying?
I think so, yeah.
Okay. Anybody else? Any other opinion? Think about it a little bit.
So out of the new ones purchased, out of the ones purchased, out of 2 lakhs, it is saying that 20,000 has already been used. So does it mean that 1,80,000 will be applicable?
Okay.
Purchase of plant machinery. So 2 lakhs only.
1,80,000 is the incorrect answer. 2 lakhs is also incorrect answer. Anybody else can think of anything?
Is it because 20,000 was used in the office and another 20,000 was previously used, so it goes to 160?
Yes.
And then since it's a new machinery, they charge 20% extra.
Yes. So 1,60,000, 20% comes to 32,000, right?
Yeah.
Yeah. Perfect. So I think.
But Dheeraj, one quick question.
Yeah.
I can understand the. Just go to the question.
1 second. Something happened. Okay, got it. Yeah. Go ahead.
So it says 2 lakhs machinery was purchased, right?
Correct.
And 20,000, I can understand that it has been installed in office and others. So 1,80,000 is there.
Yeah.
Now, here you are saying in 2 lakh, one part of that was remaining 20,000, which was used previous. So if I purchase 10 machines,
yeah,
one was installed in office, one was installed in as a used one. Is that what it is?
Yeah. If you look at the highlighted line that I have focused, if you read it out further, out of purchase of plant and machinery.
Oh, okay.
Very clearly they have said.
Sure.
Yeah. So
Can you explain how we got from 1,80,000 to 1,60,000?
So we have 120,000, right? The first one. Second one is another 20,000, right?
Okay. Those two are different. Okay.
Yeah, those two are different. Yes.
Got it.
So, okay, any questions, please? Up until now. Okay. Now let's try one more question. I'm picking Sir's questions only. So here we go. All right. So the question reads like this: Mr. Abhimanyu is engaged in the business of generation and distribution of electric power. He always opts to claim depreciation on written down value for income tax purposes. For the following details, compute the depreciation level as per provisions of income tax act. Blah, blah, blah. Opening WDB of the block, 15% rate, they have very clearly said 42. So in lakhs, the rupees, those are given in lakhs. So, okay, let me make that clear. Then we have new machinery purchased on, so the date is not visible. Let me make it even further. New machinery purchased on 12 October 2020. Can somebody tell me what it is signifying? I'll not give a hint. What?
50%.
Depreciation.
Sorry, can you repeat, please?
50% depreciation because it's not before 3rd October.
Yes, that is correct. Now, next one is machinery imported from Colombo on 12/4/2020. This machine had been used only in Colombo earlier, and the SEC is the first user in India. Now, what is the relevance of it? We have already read this provision also.
So it's a used machinery, so we will not get any
yes.
additional depreciation.
So additional depreciation is not allowed. However, regular depreciation is always applicable. Do not confuse between those two. Okay. So even if it is an import, even if it is a used one, normal depreciation is always allowed. Just the additional one is not allowed. New computer installed in generation of wing of the something. Yeah, on 15/7/2020. That date is not visible. Give me 1 second. Yeah. Now, can you please calculate the depreciation and tell me what is the normal depreciation and what is the additional depreciation, if any?
Is it 6.5 normal depreciation?
6.5. I haven't actually calculated. Give me 1 second.
Okay, sorry, no, it won't be 6.5.
$860, does it come to? Oh, sorry, 40%. Oh, 1 minute, I think wrong. 40%.
Yeah, you saw my answer.
Yesterday I was not there, so I don't know the depreciation.
Oh, okay. Just go through the video. Yeah.
$9.2 lakh. Yeah, 9.2.
Okay, now let me give time to everybody to finish.
Neeraj?
Yeah, please.
The second part, the one which you wrote 9, it will be 7.5, right?
The second one you're saying? Sorry?
No, where you wrote 9.
Okay.
Third one, what would be 7.5?
What would be 7.5? Oh, no.
Percentage. Just
No.
purchase after.
No, it won't be 7.5 because the if you look at the import date, just look at it. What is the import date?
Okay, so 12/4. Okay.
That is different. Yeah. Second point was different.
Okay.
There is one more thing that I'm missing. I want somebody to tell me what I'm missing. There is one more part that I'm missing.
The computer is in a new block.
That is fine. I have taken as a new block only. So 40% I've taken. I've calculated. No, there is one more component missing. Because of which our depreciation
20% on 10 lakhs will also be there.
Yes, that's what I was expecting. Now should it be now 20%? Just think about it. What I'm referring to here.
50% of that. Yeah.
Yes, exactly. Now, when we have a case where our asset is used for less than 180 days and it is purchased in the same year, now what about the additional depreciation? For that also, the provision says half of it. Half of it. Please calculate. Then our depreciation becomes how much? So this is our normal depreciation. Then we are calculating additional. So this becomes this into 10%. Then what is the total depreciation that we got for this year? It is 10,20,000. Make sense? Any questions, please? Did everybody solve? Any questions on that?
Yeah, Dheeraj got it.
Okay, awesome. Let me tell you one difference between additional depreciation and normal depreciation. When we have a case like this, which we had just now, where asset was put to use for less than 180 days, where we are taking now 50% of the depreciation only. And what I said was the other 50% is completely waived off, isn't it? However, for additional depreciation, 50% this year, rest 50% next year. It is not waived off. I'll repeat what I just said. For additional depreciation, where the asset is put to use for less than 180 days, in that case, 50% is allowed this year. Rest 50% is not waived off completely. It will be allowed next year.
So next year it will be 30%. Is that what you're saying?
Next year it will not be 30%. Just half
No,
of
the rest of the 10% will be taken the next year, right?
Yes, only the rest of the 10% part. It will be next year.
It's only allowed once or first time, right?
Yes, only once. Additional depreciation is only for the first year. Yes, only once. Yeah. Now that I have given that information, any questions on that, please? Okay. Now that I have given that information and I'm telling you for the next year, these are the balances that we have now. These are the balances that we have now for each of the components of the assets. Tell me what is the normal depreciation, tell me what is the additional depreciation and the total.
Normal will be 15 for the first one, 15 for the second one as well.
Okay.
And then 15 for the third.
Okay.
$40 for the last.
Please try yourself and then only you look at my answer. That would be better.
Is the normal depreciation 8.21?
8.21, 8.22, both are fine. Yeah.
Then plus 0.825, the additional depreciation.
0.825. That is incorrect. That is incorrect. So that should be exactly same as previous year. So which is 1 here, right?
Okay.
1 here. So it should be 8.22 plus 1. That becomes 9.2.
Okay.
Make sense?
Yeah.
Yeah. Any questions, please?
Clear. So Dheeraj, this 40% depreciation on
Yeah.
computers, that will continue till the value becomes 0, right? 40%.
Yes,
Or
it continues
after 2
till
years.
value becomes 0. Yes. Yeah, you're saying something else apart from that?
No, that's all.
Okay, awesome. Now, any other questions, please? 1 second, guys. Sorry, guys. Okay, yeah. Now that we have covered that, let's talk about one more concept, very basic one. Suppose we have income statement. Okay, in income statement we have sales, we have purchases, we have expenses, and under expenses we can have multiple number of things. Suppose we have depreciation, we have salary, we have other expenses, and so on and so forth. Suppose we'll take one small example. 1,000 is our sales, 300 is our purchases. In expenses, depreciation suppose is 20, salary is suppose 40, other expenses is suppose 50, which means that we are getting income of 590. So this is our income statement as per our accounts department. Now I haven't talked about the income tax yet on this. Now this is the income statement given as per the accounts department. Now we need to calculate tax that is going to be paid by the company. One approach can be, if you think about it logically, one approach can be, let's take one expense, one income, one by one. Each expense in an income one by one. Meaning that by what do I mean? So sales, yeah, it is an income taxable. Yes. Purchases, yes, it is allowable. 300 is deductible. Depreciation, no, we won't allow this much. We will allow only 16. Suppose, for example, I'm saying, as per income tax, only 16 rupees is allowed, not 20 rupees. For salary, no, 40 is not allowed, only 30 is allowed. Suppose other expenses, the whole other expense suppose is not allowed. The whole other expenses is not allowed, suppose. So now my taxable income becomes how much? Does this make sense to you? That this is our taxable income now. 654.
Yes.
Now on this 654, you will apply some percentage. Suppose for our case, for example, it is 30%. So the business has to pay 30% on this, which becomes 196 rupees 20 paise. Everybody is clear?
Yeah.
Yes.
Now, this is one approach of going directly each item by item and thinking that how much is allowed, how much is not allowed. Another way can be, just for example, we can start from the net income. Net income is how much? 590, isn't it? Then we go item by item. Let's disallow the depreciation that we had. And then let's allow the depreciation that is applicable. Let's disallow the portion of the salary that is not allowed. let's disallow the expenses that is disallowed. I'll repeat what I just said. Take net income, add back the depreciation, deduct the depreciation allowed, deduct the portion of the salary that is not allowed, deduct the other expenses that is not allowed. Let's make a sum of it. 1 second, sorry.
You don't need 20, right?
Zero. -4. The 20 is supposed to be -4.
20 is supposed to be, my bad.
-4.
Okay. 20 is supposed to be -4. You're saying? No, no, no. 20 is fine. 20 is fine. Give me 1 second. Let me figure it out. Okay. Okay.
-16 should be -4, is it?
So 20 and 16 are together,
I think
offsetting each other.
you have to, yeah. So you don't have to add because we have already in 590, it is already there, right? Deducted. Everywhere you will have to add that number 20, 40, 50.
No,
Yeah.
this is the mistake that I was doing. So the 10 salary that should be added back, 50 other expenses that should be added back. Now our income should be 654. I'll repeat what I just said. The 10 rupees salary expense that is not allowed should be added back. It should be added, not deducted. 50 rupees other expenses should be added back, not deducted. That should also give us the exactly same taxable income. Any questions, please, on this?
Dheeraj, could you repeat it?
So I'll give you a small example. Give me 1 second.
So Dheeraj, we can do the same thing, right? We can, like you said, 20 minus 16, 40 minus 30, 50 minus 0.
Yeah.
That way it will become easy for us to understand that.
Yeah.
Yeah, but how do we know that these are the values that are not allowed?
That we will go through. Which are allowed, which are not allowed, that we will go through. Okay. Just for an example, let's talk about simpler one. Okay. Suppose we have sales of 100 rupees. Then we have expense of 20 rupees. Your income is how much? 80, right?
Yes.
Yeah.
Now, suppose in income tax, out of 20 expense, only 15 is allowed. Only 15 is allowed. Your taxable income becomes how much? 85, right? It is increasing. Your taxable income is increasing. Why is it increasing? Because your expense is decreasing.
Yeah.
Now let's simplify it. Let's simplify by taking into consideration the income instead of doing the whole calculation altogether. Again, let's start from the income. Income is how much? 80. How much of expense is disallowed?
5.
5. You will add it, not deduct it. Make sense?
Yeah.
That becomes 85. Max, does that clear your question?
Yeah, got it, Dheeraj.
Awesome. Now similarly, suppose take one more example. Suppose expense in the same example where sales was 100 and expense was 20 and our income was 80. Our expense allowed as per income tax is 25. Expense allowed is how much? 25. Our income is decreasing. Why income is decreasing? Because our expense is increasing. What should happen now? How much of extra expense is allowed?
10. No, 5 minus 5. Yeah.
Right? That you will deduct. Go by the logic. Don't remember when should we add, when should we deduct. Go by the logic of what will happen with the income. Suppose your extra expenses allowed. In that case, your income will decrease, isn't it? Suppose a portion of your expense is disallowed. In that case, your income will increase. So adding the expense would be, adding that portion would solve your.
But Dheeraj, tell me if additional, suppose like example you gave 100 rupees is sales,
Yeah.
20 is allowed. Sorry, 25 is allowed, and I incur only 20 as a expense.
Yeah.
will I not be charged only on what I spent, or
No,
it will be
no,
on what?
no. Income tax has its own calculation. Often it happens that you are given some more facility to promote certain things. For example, tell you. So this research thing. So many institutions actually conduct research by themselves. When you do that, you suppose you made an expense of 1 lakh. Expenses allowed